All right. Good afternoon, everybody. Thank you for everybody who here joining us today. I'm Lisa Partida with Home Again LA, and today we have Tom Fuentes with Bank of Hope, and today's topic is going to be protecting your identity and other assets. So basically, how to prevent, you from being a victim of fraud, for example. So I'll go ahead and pass it along to Tom.
All right, thanks, Lisa. Yeah, so tonight's workshop that we have is protecting your identity and other assets. This one's not too heavy. There's a lot of definitions that we're going to have to go through, but it's fairly short. I think we got about 37 slides to do, but let's get into it. So risks to your assets. Um, in section one, being aware of risks to your assets prepares you to take steps to reduce those risks. We're basically going to identify the specific risk to your assets and identify ways to reduce the risks. Um, so assets and risks. So something that you own that has value is called an asset. Risk is the potential for harm. Harm includes losing something of value or having its value go down. You can protect the value of your assets by taking steps to reduce the risk, right? So you're going to see throughout the workshops that we do that there's apply it and try it sections. We come on our first one here. This is going to be in the participant guide. We'll kind of scratch the surface right now. But really, after you go through the lessons in the workshop, this is more of like kind of homework. But let's talk about what you're going to get in this part of the participant guide. So in this try it section in spotting risk to assets, um, we're going to identify some common assets that we all would have in common. So in the participant guide, you're going to have four. I don't think we have the second. No. So you have four. So let me describe what you're going to see. There's going to be cash, your home or where you live, your car, and your job. So those are common types of assets. And then what we're going to do, well, first of all, let me describe the assets first, right? So cash is basically in identifying a risk to having cash is that someone could steal it or you could lose it. So in the participant guide, you're going to write down the risks that are commonly associated to each asset. So where you live, for example, right? So what would be a risk to your home as an asset? Well, a disaster could damage your house, right? The value of your house could go down due to economic changes in the housing market. Look at what happened in the financial crisis of 2008. That was a long time ago now, but it's precisely what happened. A lot of the home values went down as a result of the economy during that time, right? I think one of the ones, oh yeah, I mentioned, so another asset would be considered like your car, right? We would consider a car to be an asset because it's what you use to come and go to work, right? And your job would be considered an asset because um, that's your means of income, the way that you pay your bills and live life, right? So what would be a common risk to your car, which would be considered an asset? Well, you could get into an accident, right? To minimize or to mitigate that risk, we would have insurance. We'll talk about that a little later. And then the last one that's in this section, and I'm not going to give you all the risks, that way you can fill out more when you go through this section of the participant guide. But when we think about your job as an asset, what could be a risk to that asset as your job? Well, a risk could be, what if you end up getting sick? Um, and what if you're out for a long period of time? We went through and we're still in a period where COVID comes up sometimes, right? And I'm still hearing people who are coming down with that who are sick for like a week or so, and it may cause them to not be able to go to work, right? And if you don't have PTO, if you don't have any sick time left, then you may not get paid for not going to work. But anyway, there's a lot of risks associated, so check that out and you can fill that out. So reducing risk, right? So the important thing to remember is that you can't eliminate all risk, but you can reduce some of them. So make informed choices that anticipate risks. If you're aware of risks, you can anticipate them, right? So for example, if you're aware of the risk of cash getting lost or stolen, you might choose to save some or all of your money in a bank or a credit union that's FDIC insured or NCUA insured if it's a credit union. Be careful with your personal information. Being careful about how you store and share your personal and financial information can reduce the risk of identity theft, potential loss of assets, and possible damage to your credit history. Know your rights and responsibilities. Understand the protections provided to you by the law and know what to do if those laws have been violated. And then, like I mentioned, with the risk to your car as an asset and getting to an accident, we want to get insurance. Insurance can reduce the financial impact of a covered loss. For example, car insurance can help for repairs if you were to sustain damages in the course of an accident. So risks to my assets. So again, in the participant guide, you're going to have this apply it section for risk to my assets. You can complete the table after today's training to identify risk to your assets and what steps you might want to take to reduce those risks. So really similar to what we did in the try it section before, but this is more personal to you. So remember, in the first try it section, we had those four broad asset classes we identified as your house or where you live, your car, your job, and cash. Well, what if you have assets that go beyond those beyond those four things, right? So because this is going to be specific, we're going to list assets that are specific to you. So let me give you an example. What if we could consider something like your 401k retirement plan as an asset? We would write that down under my assets, and then we would identify risks to those assets. We would identify the risk to your 401k. Well, a risk to your 401k could be market fluctuations. If the economy is not doing well and the market's not doing well, your assets could go down in value. How can we reduce those risks when it comes to your 401k? We would reduce those risks by having a diversified portfolio where we wouldn't have all of our money invested into one asset class, like the S&P 500, for example. We wouldn't throw 100% of our 401k into the ETF that tracks the S&P 500. No, we would have an ETF that would have the S&P 500. We would invest in bonds. We would invest in different mutual funds that track different indices. We would invest a small portion of our portfolio into international stocks. So essentially what we would do to reduce the risk for 401k is we would have a very broad portfolio that would mitigate the risk if the economy was going through struggles at the time. So anyway, that's just another example. So what you're going to do in this risk to my assets, identify the assets that you have, identify those risks to the assets, and then write down the way that you would reduce those risks. Okay, so that is the end of section 1. Essentially, what we're going through in this first section and what our key takeaway is that if we're aware, first of all the assets that we have, and then we're able to identify those risks, the idea is that we can anticipate what we need to do to mitigate those risks in case those things come up. And like we said in a couple slides ago, we can't mitigate all risks because we're not perfect, right? And life is unpredictable. But the idea is that we can have a good plan attached to what we have going on so that we could mitigate these. Now that we've identified assets and risks, I want to talk about identity theft and fraud. Okay. So in this section, we're going to define identity theft and fraud. We're going to identify warning signs of identity theft and fraud. We're going to list steps on how to minimize the risk to identity theft and fraud, and then describe important steps for responding in case we're victims of this. Okay. So in this section, the key takeaway, you can reduce your risk of identity theft, and then help is available if it ever happens to you. So let's go through some key terms so that we can better understand these things. So we're going to go through identity theft basics. Okay. So your identity is actually an asset. So now when we complete that first section in the imply it, we can list our identity as being an asset. Okay. So for example, your identity is as an asset. Your identity can help you get a job. It can help you be approved for a loan. It could help you rent an apartment and open a bank account. There's risks to your identity, and the major one is identity theft. Identity theft is a crime that happens when someone uses a person's identifying information without authority. So, for example, someone might open credit cards in your name. Your identity can be stolen by family, by friends, or by complete strangers. So, what do you mean by identity when we talk about ID theft? So, there are many different pieces of information that make up your identity as a whole. Your identity includes information and documents that can be used to verify who you are. So, you can, uh, so let's identify some specific examples um, of what we're talking about here. Okay, so let's think for a moment and what could fall into this bucket. Okay, so, and I don't think we have them listed here, so I'll talk about them verbally real quick. So there could be identifying information on your social security card, right? Because on your social security card is your social security number, and your social security number can be used by ID thieves, right? Medicare identification card or health insurance identification card. There's a whole bunch of identifying information on that on those cards, right? What about your birth certificate, your driver's license, or your state ID card? What about your passport? How about an ITIN, individual taxpayer identification number? Uh, Native American tribal documents, matricula consular cards. The idea here is that there's a whole host of different pieces of information that have personal identifying information on them. And these pieces of information can be used by thieves to impersonate you. Um, so, what are some examples of other pieces of information that can be used by thieves to impersonate you too? So, we've kind of gone through like the different types of like ID cards or things like that. But think about this, for example. What about financial account numbers such as credit card numbers and bank account numbers? Insurance policy information, tax information from your past tax returns, history of where you've lived and when you've lived there. Okay. Utility account numbers, usernames and passwords for online accounts, answers to common security challenge questions. You know, like when you set up an account and it asks you for challenge questions like, what's your mother's maiden name? What school did you attend? What was your high school mascot? Those things could be used against you too if anyone got a hold of them. Your medical information, such as your doctor's name and your medical record number. Certain types of bills could have identifying information on them. Bank statements, your checks from your bank, and pre-approved credit card offers as well. So how could you be harmed if someone were able to get some of this information that we just talked about, right? So the person committing identity theft could theoretically, if they had access to this information, could open up accounts in your name at financial institutions, including credit cards. The person committing identity theft could then borrow money or buy things and leave you completely in debt, right? Access your financial accounts and steal your money or leave you with debt. They could file false tax returns in your name, and they could get your tax refund um, if you were going to get a tax refund that year, right? It's absolutely crazy. They could use your identity to obtain prescriptions or medical treatments. And this could result in medical providers billing you for services you didn't receive. your health plan rejecting your legitimate medical claim because the records show that you've reached your benefits limit, having other issues with insurance coverage because your medical records show a condition that you don't have, medical mistakes if someone else's medical information is connected to your name and identity. So there's a whole bunch of things that can happen if someone gets a hold of this information and your identity, right? So let's talk about some key terms real quick. So criminals continue to become skilled in identity theft, and we're going to identify some key identifying terms so that we can become better informed with the type of fraud that's out there. The first thing that we have is phishing. So phishing is when criminals attempt to trick you into giving them your personal information, often through email. So a criminal sends a fake email that appears to be from a legitimate source, such as your bank, utility company, or a well-known merchant. These emails often look very legitimate, even though they're completely not. They ask you to provide sensitive personal information the criminal can use to steal your identity. Phishing through the phone is called vishing or voice phishing. One of the nice things is that I have a Google Pixel phone. I have a really old model, but one of the cool things that I like as a part of the Google platform and the Pixel is that I have like vishing software built in where I have the ability to screen calls that Google deems to be spam. So I think that's pretty cool. Phishing through text messages is often referred to as smishing. Okay. You also have spear phishing, which is a targeted form of phishing in which criminals try to trick groups of people that have something in common. So, for example, a spear phishing scheme might target people who work at the same company, have accounts at the same financial institution, who maybe attend the same school, or shop online at the same website. The spear phishing emails look like they were sent from organizations that people are familiar with and trust, but in reality, they're from criminals who are trying to get your personal information. There's this other thing called farming. Farming is when criminals seek to obtain personal or private information by making fake websites that appear legitimate. There's also this thing called skimming. Skimming is when criminals steal your credit card or debit card number by using a special storage device that they hide inside of ATM or point of sale machines, where they attach it to the card reader. And when you swipe your card, they can steal your number. There's also social media scamming, and that's when criminals trick people into giving them personal information on social media sites, chat rooms, bulletin boards like Reddit, for example, or mobile apps or photo sharing websites. Warning signs of identity theft. So watch out for early warning signs that your identity has been or may have been stolen. You see withdrawals from your bank account that you didn't make. That's a red flag. You don't receive bills, account statements, or other mail when you're expecting them. Merchants that may refuse your checks. Your credit card transactions might not go through. You receive letters thanking you for opening an account that you didn't open. You receive emails about purchases you didn't make. You receive credit card statements for credit cards that you don't have. Debt collectors call you about debts that aren't yours. Suddenly, your passwords or usernames or IDs don't work on your online accounts. You find unfamiliar accounts on your credit reports. Remember to pull your annual credit report, it's free. You receive medical bills for services you didn't receive. Healthcare providers have records of conditions that you don't have. And then maybe the IRS notifies you that more than one tax return was filed in your name, or that you have income from somewhere that you've never worked. That's crazy, right? You're notified that your information was compromised by a data breach at a company where you do business or have an account. So in this, in the participant guide, in this try it section, you can check this out after today's workshop. We have this scenario with Karina and Karina spotting warning signs of ID theft. So in this scenario, on her way home from work, Karina stops by her mailbox to pick up her mail. She walks by her apartment. She begins reading her mail. She sees happy to see you letter from her daughter and a wedding invitation from her nephew, but she also notices the following pieces of mail: an envelope from her place of worship, an envelope from a dentist's office, an envelope from her bank, a thick envelope with coupons, an envelope from her from the county government. So in this scenario, I don't think we have a picture of the box, but I can explain what you're going to see. Okay, let me try to explain what you'll see in the participant guide. So what you're going to see is you're going to see a box in the try it, spotting warning signs for identity theft. And there's going to be two sections in this table that you're going to see. On the left, there's going to be the pieces of mail that Karina received. And on the right, it's going to be, are there warning signs for ID theft? So essentially, each envelope is going to be on the left-hand side. You're going to write down on the right-hand side whether or not there's any warning signs of ID theft from these pieces of information from these entities. Okay. Check that out after the workshop. Let's go through one just so you can see what we're talking about. So in item number 1, an envelope from her place of worship. So on the reverse of the envelope, it says, contribute to the renovation fund this month and we will match your donation. So on the right-hand side, are these warning signs of ID theft? Likely no, this is not a warning sign. The risk is low, especially if Karina is familiar with the renovation project at her church. She can double check that all of the details in the mailing look legitimate, such as the address that is pre-printed on the return envelope. So you can go through each of the pieces of mail to see and identify whether or not there's any warning signs there. So we have steps to minimize identity theft, right? So remember that you can never completely eliminate the risk of ID theft, but you can take at least steps to minimize it, right? So you can guard your personal information closely, be extremely careful about sharing your social security number, credit card and debit card account numbers, personal identifying numbers, PINs, for examples, passwords, other personal identifying information. If anyone asks you for these, you need to ask yourself, why do they need it? How is it going to be used? How they will protect it, and what happens if you don't share it, for example, right? Don't respond to unsolicited requests. Never provide personal information in response to an unsolicited contact by email or phone. Even if the caller or emailer states they are with a financial institution or other organization you have a relationship with, do not give them information as requested. Instead, contact the financial institution or organization directly using the contact information on their website, okay, or on your account statement. Protect your mail. Your mail is often an easy target for ID theft because you likely receive and send personal information in the mail. Consider using a locked mailbox if possible, or a PO box at the post office if you have the means. Pay attention to billing cycles and account statements, and contact your financial institution if you don't receive a monthly bill that that you regularly get or that you expect. You could go paperless too, so that you can minimize the amount of mail that you get in your mailbox. So that can be useful. You may want to sign up for a direct deposit at your financial institution. Don't get your paycheck delivered via mail. Get direct deposit. Benefit of direct deposit at your bank. Money is directly deposited, and you don't have to worry about any holds or anything associated in that regard. Clean up your financial trash. If you have the ability to, you want to shred documents. Some of these shredders can be kind of expensive. I've seen them on Amazon or Walmart. I want to say in the $50, $60 range. These are kind of cool because they cross-cut shred and basically turn anything with identifying information into like confetti, essentially. Um, so that could be a way to get rid of any printed materials that have your information. Review your financial accounts regularly and carefully. Contact your financial institution immediately if you see something suspicious, like a purchase you didn't make. Most financial institutions offer several, different kind of alert programs. So you want to make sure that you sign up for those alerts so that you can be notified. For example, maybe your account is used in a different state that you're not currently visiting, or overseas and you're not traveling, for example. While federal and state laws may limit your losses if you're a victim of fraud or theft, to fully protect yourself, you need to report the problems quickly. Beware of ID theft on the internet. Never provide bank account, credit card, or debit card, or other personal information when visiting a website that does not explain how your personal information is going to be protected. Protect your devices, such as computers, phones, and tablets. Ensure your access points are safe, including setting strong passwords on your Wi-Fi network. I would say, especially like if you're in public and you're using public Wi-Fi or free Wi-Fi, you want to be very careful. Download and frequently update security patches and software updates offered through your operating system on your devices, on your computer, your tablet, or your phone. You can find out more information on the FTC's website, by the way. It's www.onguardonline.gov. Review your credit reports. You can get a free credit report every 12 months, and when you go through those, you can identify any signs of ID theft. You'll go to annualcreditreport.com for that. Keep your important documents secure. Consider storing critical papers in a fire-resistant, water-resistant lockbox, for example. You could also get a safe deposit box at a bank if you have the means. Beware of disaster-related scams. Con artists take advantage of people after disasters by claiming to be from legitimate charitable organizations when in fact they're attempting to steal money or your personal information. We saw this a lot with the LA fires that happened. Read scam alerts. The FTC has a running list of scams that are going on, and you can see that at consumerftc.gov scam alerts. In the apply it section in the participant guide, we have a My Action Plan to reduce risks of identity theft. This only takes a few minutes to complete, but you can complete it after the workshop. But you can see kind of a snippet here. You can use this worksheet to list what you want to start doing or do more of to reduce risk of identity theft when it comes to things like guarding personal information closely, not responding to unsolicited requests, protecting your mail, signing up for a direct deposit, kind of those things that we talked about, cleaning up financial trash, so on and so forth. You can check that out. What about reporting ID theft and getting help? So I already mentioned the FTC a lot, the Federal Trade Commission. It's a great source for information on ID theft. Their site at identitytheft.gov has this identity theft report if your identity has been stolen. Your identity theft report proves to businesses that someone stole your identity and makes it easier to correct problems caused by ID theft. You see a picture of it here. If you follow the link in the slides to identitytheft.gov, you can see the different pieces of information that's required to fill it out. If your identity has been stolen, the FTC also advises you to work with credit reporting agencies to respond to identity theft. The credit reporting agencies, also called the credit bureaus or credit reporting companies, basically provide your credit reports. If you create an ID theft report, you can always place a 7-year extended fraud alert on your credit reports. Placing this alert is free. This alert means potential creditors must verify your identity before they issue credit in your name. To place this alert, contact one of the 3 nationwide credit reporting agencies, Equifax, TransUnion, or Experian. The one you contact must notify the others. When you place an extended fraud alert, you're also entitled to 2 free copies of your credit report within 12 months from each nationwide credit reporting agency. Instead of placing a 7-year alert, you can also place a 1-year initial fraud alert, which is also free. The difference is that an identity theft report is not required for that. You can place an initial alert if your identity has been stolen, or if you're simply concerned it might be stolen. The process is similar to placing an extended fraud alert. When it expires in 1 year, you can place another one if you wish. Your identity, if your identity has been stolen, the FTC also advises that you oh, sorry, we're talking about fraud alerts. If you have other federal rights related to identity theft, you can go to identitytheft.gov. For example, you generally have limited liability for fraudulent debts caused by identity theft. The amount of your liability depends on what type of financial product was used by the thief, and also how soon you reported the issue after becoming aware of the theft. In many states, businesses or organizations that lose or misplace certain types of personal information must tell you if that's happened. In fact, it happened to me. Today, I received an email from, oh gosh, who was it? Let me look at my email real quick, because this is crazy. It was from, oh no, I can't remember. But anyway, today I received an email from, I can't remember what organization it was, but there was a data breach that uncovered people's usernames and passwords. So they sent it for me to warn me that I needed to go into my account and change my password. Literally this morning I got that email, so it's pretty crazy. Yeah, so that is, I believe, what we've got for that section. So you can reduce your risk of identity theft, and help is available if it happens to you. In our last section, we're going to go over insurance and record keeping. We're going to briefly go over and explain how insurance works, identify types of insurance and the needs that they meet, and then explain the role of record keeping and how that's important. So the key takeaway of our last section: insurance provides protection from financial loss and keeping accurate records of your assets and any damages to your property. So briefly, how insurance works. So insurance can reduce the financial impact of loss or event covered by the insurance policy. So for example, insurance can cover part or all of your losses due to various events such as car accidents, property theft, ID theft, natural disasters, medical expenses, disability, or death. Some people may think of insurance as a luxury or unnecessary expense, but insurance is an important way to protect yourself in the case of financial catastrophe. If you do not have insurance and something happens that could have been covered by insurance, you would likely have to use your own money to recover from the loss. And you could eventually go into debt by borrowing the money to cover it. A key consideration about insurance is that you need to have that insurance before the event occurs. Let's go over some key terms. When you purchase an insurance policy, you agree to pay money. That's known as the insurance premium to the insurance company on a regular basis. In exchange, the insurance company agrees to pay for losses or events covered under the policy, known as the covered loss, up to a maximum amount of money called the coverage limit. Some insurance policies include a deductible. You may have heard the phrase, "I met my deductible." If it's an annual deductible, which is common with health insurance, you can agree to pay up to that amount each year before the insurance company will pay any claims that year. If it's a per claim deductible, which is common in insurance, vehicle insurance, you can agree to pay to this amount for the covered loss. If the loss is more than the deductible, the insurance company will pay the balance. Some more key terms. So some insurance policies include a copayment or coinsurance. A copayment is a dollar amount that you have to pay each time you receive services or file a claim for a covered loss. It's similar to a per claim deductible, but usually a smaller dollar amount. Coinsurance is a percentage of each claim you must pay before the insurance will pay. If you have 20% coinsurance, that means that you pay 20% of the cost of the covered loss and the insurer pays 80%. Most insurance policies include exceptions or exclusions. These are limits on insurance coverage or situations the insurance will not cover. For example, homeowners insurance policies generally have an exemption
Sorry.
or an exclusion for floods. That means that damage from certain types of natural disasters won't be covered. To be compensated, you'll usually need to file a claim with your insurance company. A claim notifies the insurance company you have incurred a loss, and you believe that the insurer will cover it. The insurance company will adjudicate the claim. Adjudication is a process of basically reviewing the claim. There is a whole host of different types of insurance. We have health insurance, long-term care insurance, dental insurance, vision insurance, disability insurance, life insurance, pet insurance. There's a whole different different types that you'll need depending on the different assets that you have. So the types and amounts of insurance that you need are going to depend on your personal situation. Purchasing insurance is about managing risk to your assets. And it's important to have the right insurance coverage in that case. Consider getting insurance to protect against things that could happen and would cause you serious financial harm. For example, having homeowners insurance is generally a good idea since your home is the most expensive asset you're likely to have. In some circumstances, insurance is required by the law. Like in the state of California, you have to have car insurance. It's the law. Periodically review all your insurance coverage to make sure that your coverages are up to date and they're covering the costs of the asset that you're covering. Many companies and organizations offer insurance. I think it's important that you shop around to make sure that you're getting the best possible deal on your insurance. Shopping wisely, consider reviewing state-specific information on shopping for insurance from your state's Department of Insurance. Check out and compare different insurance companies and the different products that they're offering. You can ask insurance agents about different discounts that may be available. This is something that my wife and I did when we were shopping around for car insurance and homeowners insurance, and eventually landed on AAA after talking to an agent. You can compare quotes from several companies, which is what we did when we were shopping around. And then you consider trade-offs between any policies, deductibles, co-insurance, or coverage limits and premiums, kind of like what we discussed earlier. In the supply it section about insurance, it talks about, do I need this insurance or don't I need this insurance? So this is going to be specific to you and your situation, but check it out after the workshop and go through to see if this kind of will drum up any ideas in your mind on whether or not this is the kind of coverage that you're going to need. It's also important to remember to keep accurate records, list inventory of your assets, document damages to your assets if they occur, just in case you need to file a claim. Creating and maintaining a detailed inventory of assets can help in recovering any property that's been lost or damaged. You can also take photos or pictures of whatever property, especially if they're high dollar value. In this inventory, you can write down like what the value of the asset is. Keeping good records can expedite your claim and processing because you're better prepared. provide documentation for tax deductions if they're applicable in the case of any losses, document any damages and save receipts related to any expenses. So receipts could be a good record keeping item as well. You want to make sure that you're filing claims as soon as possible because sometimes there's a time limit associated to things. If it's a physical asset that's been damaged, a representative of the company might come to see the damage. I bring this up a lot. A couple years back, we had some water damage in our kitchen. We had to have a claims agent from our homeowners insurance come out, and she took pictures of the inside of the damage and in the attic, just in case we wanted to file a claim. So they may come to your house and take pictures. Anyway, that brings us to the closing of this section as well as the closing for our workshop. In this final section, remember that insurance provides protection from financial loss, and then keeping accurate records of your assets and any damage to your property is a good idea too. So now that we're at the end, be happy to answer any questions. I think that my internet connection is stable now that I can turn my camera back on. But yeah, so that's your identity and protecting it. Do we have any questions?
I don't see any in the chat. They were just asking to receive the
The
participant
participant
guide.
guide?
Yeah. But in any case, I'm glad that we covered this, especially the insurance part, because that was a lot of information that we could have used for sure.
Oh yeah, it's
Uh,
a lot.
yeah. But I do appreciate you sharing that information, Tom. Thank you so much, and we'll see you next Wednesday.
Yep. All right. Sounds great. I hope everyone has a good night, and then we'll see you for our next workshop next week.
Thank you. Bye.
All right. Bye, y'all.